Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, Tuesday morning, and we've got positive cues from Wall Street again, second day in a row, and I think that's good news, bodes well as we start our own session. Yesterday was a decent session as well. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Mangalam. Guys, hi, good morning.
Hi, good morning. There's some red, there's some green. I wonder what's it going to be, but I think we're giving you both the options today between Mangalam and myself.
You know, I'll tell you what, in sport, they say you celebrate small wins, as against looking at the larger target here, right? We're celebrating small wins. The good part is yesterday we managed to close above that 22,500 mark. The FIs, yes, they sold in the cash market, but DIs bought a lot more. So we had net inflows coming in. And all said and done, crude is contained. All the other macros are contained. So small wins.
Small wins.
I'll tell you, expectations low. The last 5 months have sufficiently lowered those expectations, I think.
I'll tell you small wins. You said in sports, celebrate small wins. I think in life also celebrate small wins. I'll tell you a small win I had this morning. I boiled eggs without breaking them.
Oh, wow.
Brilliant. Excellent. On that optimistic note.
I played 3.5 hours of paddle yesterday
nice.
without breaking anything else. So, small wins, small wins.
All right, well, let's just take it from the start then in terms of what you need to know as we begin another session. And as I said, second day in a row, you had U.S. markets which were higher. S&P was up about 0.65%. It's the first two-day gain for the S&P since February, and that's saying something, right? I mean, and this is the question we put out yesterday as well, that is the U.S. market correction ended. From the high to the low, it was about 10%. Typically, 10% is a turnaround point. The dips get bought. This time, though, like every time, I mean, every time is new, but it's also the same in some ways. And there is a lot of uncertainty into that April 2nd reciprocal tariff event. But anyway, Nasdaq was up about 0.3% as well. But the mega cap tech pack ended lower. So you look at Tesla, which was down 5, Nvidia, which was down 2, Amazon, which was down about 1% as well. So, what did well? The China ADRs did very well. You had a bunch of telecom stuff which did okay. Consumer names did well. But mega cap tech essentially is what has led the U.S. markets higher. And of course, I mean, it's led to this, I don't know about U.S. exceptionalism, but stock market exceptionalism for sure. 10-year yield down 2 basis points, nothing. I mean, dollar index was down about 0.25% as well. I mean, I think that's more meaningful. 103.46 on the dollar index. Again, from the year-to-date highs, the dollar has slipped almost about between 5 and 6%. U.S. February retail sales print was mixed. The control group was better, but largely mixed. The prior number was revised a little lower. And I think it kind of tells you that this, economic momentum, there is a bit of a loss in economic momentum as well. High-frequency data seems to indicate that. Two things to watch out today. The Trump-Putin phone call on Ukraine-Russia war is today. And expectations built up quite massively about 2 or 3 weeks back that a resolution around the Munich Security Conference time, that a resolution, some kind of ceasefire is around the corner. But, well, that those hopes faded. There's a phone call today, and Trump has promised that he'll have something for his audience and all of us a little later. So hopefully maybe a ceasefire. And, of course, the German parliament will vote on the fiscal package which has been proposed. And that typically happens towards the end of the European session. So we'll see what happens. I mean, it'll be after our session for sure. And that's a big one. Europe has started to, do well. And many are wondering whether other EU countries will follow the lead. France and other countries as well. How much they're able to, because it's a pretty dramatic shift with Germany is embarking on. So I think it's important in that sense. And of course, from an equity perspective, I mean, it throws up more opportunities, more options in the world for global investors. All right, let's just tie in the levels here. Nifty, of course, tested the 20-day moving average yesterday, but could not close above it. The number is 22,561. we're about 50 points, 52 points away from that number. So, that's the first level on the upside. And then 22,676, which is the high, the recent high, needs to be taken out for the market to do better. The supports remain the same, which I put out yesterday as well. Some more distance after yesterday's 0.5% move, 22,315 on the downside, 200 clean points away. And then below that, you've got the 22,236, which is the retracement, 61.8% retracement of the 700-point rally that we had from the lows. For the Nifty Bank, the resistance comes in at 48,520 and then 48,839, which is the daily swing high, 48,839. And support, of course, now is 47,700, which, of course, is the low that the Nifty Bank saw last week. GIFT Nifty will give you a sense of how we're likely to start. 160 points. Is that momentum going to start to come back a little bit? I'm not so sure that momentum is coming back now, but I think, as we've been saying, the signals are there that the texture of the market is changing. It's not selling the rallies. Maybe at the margin, it is trying to buy the dips wherever they may emerge. Just one thing, broader markets yesterday did see advanced declines skewed towards what was down, not up, although volumes were with stocks which were higher. And I think that is also at the margin indicating that even though it's not all clear, but things are perhaps improving there as well. So more volumes on what was up, many more stocks down, but with little volume. I mean, that's not a bad sign at all. Surabhi.
Oh, absolutely. Things have been improving over the last couple of trading sessions, yesterday included. And today, the reason why the implied open is showing you such a bright shade of green is because Asian markets are rallying across the board. There's a nice, upward lift across the region, whether it's the Japanese markets, Chinese markets, Korea, everything is up and about. By the way, in China, talk about Chinese tech. BYD shares have been quite the headline makers this morning. That stock's been surging 5-6% because BYD claims it's got such a supercharged EV technology, EV charging technology, that your car can be charged in almost the same time as it would take to fill a full tank of petrol or gasoline. So that's been the talk of town, at least in the Asian market region, doing very, very well. It's also a week of central bank action, so we'll talk about the Fed, obviously. That meeting kicks off later tonight. There's also Bank of Japan. They have a two-day meeting. It's kicking off today. Tomorrow we'll have the BOJ announcements. There's also Bank of England, and that comes in on Thursday. So major central bank action week. And all these central banks, by the way, are expected to remain on hold. Even the BOJ, which later in this year is expected to hike because the Japanese economy is doing well, is expected to not do anything, not this week at least. So that's on the central banks. On retail sales, the US number, why did the market not sell off? The number was still very soft. The number was 0.2% versus estimates of 0.6%. However, X of autos, the number was in line with estimates. The growth was about 0.3%. But of course, there was that downward revision in the Jan number. Anyway, for what it's worth, it didn't really shock the system, so to speak. So the market continued to cruise along. There are downward revisions from the OECD, by the way, in terms of global growth forecast, US growth forecast. So just to leave that data on the table for you, OECD has cut the global growth forecast for 2025 from 3.3 to 3.1%. So, and it's all because of tariffs. They're saying that in their commentary. For the US itself, the estimate for this calendar year, 2025, has been lowered from 2.4% to 2.1%. And for the next year, 2026, the US is expected to grow only 1.6%, but they're still talking growth. Remember, the bigger issues are about stagflation and maybe even a recession. But those are the OECD latest numbers. Now, yesterday, the only glitch for our market was the return of FPI selling. Remember, we've been, discussing the let-up in FPI selling for the better part of last week, but yesterday was pretty big. Maybe it had something to do with the fact that a lot of these shareholder lock-in periods were ending, so perhaps there was, a bit of a skew in the data because of that. But for what it's worth, you can't ignore it. 4,500 crores of near about selling coming back on the system. It was offset very nicely by DII buying, 6,000 crores of DII buying. Now, the Nifty, if it remains on that cautiously optimistic path, it could perhaps head to the upper end of the current trading range. We've been in this range for a good 6-7 trading sessions. The higher end is around 22,650 to roughly 22,700. And maybe that would be the first aim that the market will take. Lots of stocks in focus. I'll just leave some names for you. Obviously, Bajaj Finserv and Finance will be watched very, very carefully. It's finally happened because Bajaj Finserv, along with a couple of other promoter group entities, they have bought out Allianz's stake in the life insurance and the health insurance joint ventures and spending a big amount of money, almost 24,200 crores in that transaction, and we'll talk about it. IndusInd Bank. Now, Moody's has placed the baseline credit assessment on review for downgrade. The rating is the same. That's not the problem, but it's this baseline credit assessment because of what's happened in the derivatives portfolio. We'll see if the stock reacts or whether it's already done that reaction in the 27% fall that the stock has already seen. And finally, Remember, we keep telling you that the sign of promoters buying their own stock in the market is usually taken as a positive. Well, yesterday we noted that in Suryodaya Small Finance Bank, the promoter group has increased its holding from 22.3 to 22.4%. So another stock I'll keep on the radar because of that positive indication. But overall, as you're saying, happy to take the small wins, Manglam, this morning.
Happy to take the small wins entirely. And the biggest win of that was the Nifty closing above that 22,500 mark. Why is that important? Largely because it's the first time in the month of March that has happened itself. So let's tell you a little more about the way trade is set up as well. So the Nifty closed above that 22,500 mark. But more importantly, the GIFT Nifty is indicating a very strong start above the zone from where we've seen a lot of supply emanating as well. So if you look at a bunch of highs on the Nifty over the last few trading sessions, you'd notice that yesterday's high on the Nifty, 22,577, exactly coincides with the March 12 high as well. And now after consolidating a little bit, the market's finally opening at a much higher level. So those are a couple of things that we'll most definitely keep an eye out on. The most important thing for bulls is that dollar index is contained at around 103.5. We've seen crude prices contained at around $71 per barrel as well. Wall Street indices, while they gained about 0.3 to 0.8% yesterday, Intel is up close to around 7% higher post after hours. So that's good for Nasdaq today as well. And oil prices are contained. What we need to do, however, is stay above the 20-day moving average. At the open, the Nifty conquers that, stays above that. But does that happen to the Nifty Bank as well or not is the big question. The FIs, yes, they sold about 4,500 crore in the cash market, but that was not only offset by DII buying, that was also offset by FI's own buying. They bought about 1,900 crores in index futures and they bought about 3,300 crores in stock futures as well. So all these factors doing well. In fact, in index futures, after a very long time, we saw FIs add 2,500 long contracts and cover about 10,000 short contracts as well. And if you notice, over the last 3 trading sessions, the FI longs have inched slightly higher from 18% to 19% and now 20%. Talk about small wins for the bulls itself. You look at the options that are active, 22,500. The Nifty conquered that and the put writers have become active here. On the way up, the 22,700 call writers are playing for a premium of 44 rupees. The GIFT Nifty indicating a start around the 22,750 mark will be the first test of the open itself. And were we to sustain that, there is a fair amount of punt buying at the 22,850 call as well. So short point, option writers are positioned for a range of 22,400 to 22,750 on the Nifty. But were we to break out, then there have been some punt buying at the 22,850 call itself. So maybe they are playing for that 30, 40 rupees sort of pop after a 15 rupee premium on that 22,850 call itself. We've been talking about financials, how they will be in focus, but I'm looking at some of these large private sector banks which are non-HDFC. Yes, HDFC has been doing well, but what's doing better is ICICI Bank, Axis Bank, and surreptitiously, we've seen a lot of capital move to names like Kotak Mahindra Bank as well. So can these sustain their outperformance or not is something that we'll most definitely track this morning.
Okay, all right, Manglam, got that. So lots of cues to watch, largely looking constructive, can we say that for sure. Well, let's start off with the equity call of the morning. Mahesh Nadurkar of Jefferies says, the Jefferies Economic Indicator for February 2025 shows that activity levels grew at 6%, similar to the trends of the past 4 months. He says steel and cement volume growth at 10% for the past 3 to 4 months and recent uptick in electricity consumption are key positives. He adds that consumption indicators are uneven with auto sales GST data patchy. He says RBI's consistent liquidity injections, CPI at 7-month lows and FX reserves at 4-month highs provide some macro comfort.
All right, well, some macro view now. This is Upasana Chachra of Morgan Stanley who says that lower trailing inflation driven by decelerating food prices opens up room for additional easing. She expects CPI inflation to average 4% in FY26, which implies cumulative easing of 75 basis points. She says the key trends to track are food prices and growth, especially credit growth. Okay, let's welcome in Lynn Alden, founder at Lynn Alden Investment Strategy. Lynn, good to have you with us here as always. Thank you very much for your time. I mean, is the US market fall over, you think? 2 days now. Market's been up 2% on Friday and about 0.5% last night.
So I think that it's oversold and it's due for this bounce here. I think some of the key headline risks are still present. And I think that there's a larger chance of a pretty more long-term rotation here. I think for a very long time, global capital has been overweight U.S. stocks. It's kind of been one of the main places to invest in town. And some of those macro things have kind of started to structurally shift. And some of those things feed on each other. So, for example, the U.S. is very financialized. And so lower U.S. stock prices can damage the wealth effect. A weaker dollar has a similar role. And with increased uncertainty around tariffs, business investment conditions, and stock investment conditions, there are just more headline risks now. And so I think that while these moves don't go in a straight line up or down, I still think that there's really more attractive opportunities outside of the U.S. in a lot of areas that have been kind of considered uninvestable for a number of years.
Okay. Lynn, what's your sense? Yesterday, at least, the U.S. retail sales data, that did not deliver any shockers. The market's kind of cruising along for the time being. But do you see this as just a bit of a pullback from maybe oversold levels? Or do you think we're past the worst of the whole tariff tantrum?
So I think the sharpest activity is behind us, both in terms of headline risk and in terms of the impacts on the economy. I still think there's some to go because some of these downstream effects impact the lag. Because if businesses are delaying CapEx spending until they have more clarity, that can take months to resolve. And even the ongoing retaliations and negotiations are still ongoing. And when we look at kind of the not just tariffs, but also the fiscal and monetary support, we're in a place where the U.S. has kind of been gradually pulling back fiscal support. There's things like the DOGE program that are attempting to trim the budget deficit. We still have a Federal Reserve that's on the hawkish side. Meanwhile, as Europe kind of ramps up defense, which is a form of fiscal stimulus partially, and as we see China continuing to drip out various types of stimulus, some of these dynamics have shifted because in the past several years, the U.S. was the very kind of fiscal heavy economy, while we saw more austerity out of a number of other economies. And at least around the margins, there's been a little bit of rotation there. And I think that will probably continue to translate to equity performance.
What about India, Lynn? Always the question, right? Because we've underperformed versus China lately, and that's largely because of China's earlier underperformance. Now that people are finding value in China, a lot of flows going there, the Indian valuations have moderated as well. What are your expectations here? And any particular stock sector that you like here?
So I'm fairly bullish. I think it's showing a good sign that it's stabilizing here. As you pointed out, China was, really like oversold. They were at very low valuation levels. India has always been considered investable from, say, the perspective of here in the U.S. or elsewhere, whereas China went through a multi-year phase of largely being considered uninvestable. People were worried about, potential sanctions, potential, geopolitical risks, as well as the fact that, they had that period of going after their big tech stocks. But as a lot of that has shifted, that's become more investable from a very low base. So I think that maybe that explosive move is behind in China. I still think they have room to go higher. And I do think that while India was never as oversold or as cheap as some of these other places, I do think it's due for potential stabilization and heading north from here.
All right, Lynn, thank you very much for that. It's always a pleasure. Quick conversation, but insightful. Thank you. Let's quickly run you through the corporate interactions which are lined up through the course of the day. 9:35, you'll hear from the management of Senco Gold, and we'll ask them how's jewelry demand holding up, even as gold prices continue to rise. Not just gold, actually, silver as well. 9 o'clock, we'll have the banking analyst from Bernstein to talk about what's happening in that space. What does he like? What does not? A lot of action in banking over the last 10 days or so. Mahir Vora is a market match today at 9:15, 9:30. Berger Paints will be with us and we talk to them about demand outlook. Shriram Finance, stocks done very well, will be speaking with us at 9:40. They raised some money from development financial institutions. Yashish Dahiya of PB Fintech will be with us after the announcement that they're investing 696 crores in PB Healthcare. And of course, it's the economy. Lata in conversation at 10:15 with Niranjan Hiranandani of Hiranandani Group and Gulam Zia of Knight Frank to discuss if stock market decline has slowed the real estate sector.
Okay, so all of that coming up. But first, let's focus on the macros. Now, India's goods trade deficit fell to a 3.5-year low of $14 billion. This is thanks to a steep fall in imports. Imports actually declined 16% year on year, while exports fell by about 11%. Lata is here. with some of the key takeaways from the numbers. Lata, these are numbers before the full extent of the trade wars hit us. What is your key takeaway?
Well, trade deficit being lower sounds good, but this is the lowest in 3.5 years, 41 months. The last time we had such low deficits were during COVID. The monthly trade deficit normally ranges between 15 billion and 25 billion. That's the average. But of course, like I told you, during COVID years, 2020, it was 6 billion to 12 billion. Again, in 21, those delta months, it was at that same level. But in a normal month, we should at least do about 15 to 25 billion. That's why I worry about this 14 billion trade deficit as very low. The Commerce Ministry officials just put it out to, high base, lower crude prices, perhaps even lower gold imports. But, the high base, yes, February of last year had one more day. It was a leap year, so 29 days. That can account for about 3% fall, not for a 16% fall in imports. And therefore, I would worry if, we should take away some worries from this. Anyway, let me give you the positives. If you count the trade deficit with the, when you say trade deficit, it's the goods trade deficit. In services, we've always been posting a surplus. But if you count the two together, we are posting a surplus for the month of February. Normally, in spite of the services surplus, the overall is still a deficit. This time, it is a surplus of $5 billion. And chances are, and again, this is the first surplus since the COVID year, 2021, the Feb numbers imply that March could also be a surplus because March always is a record for exports. People are, finishing up, meeting targets. So we are going to have 2 months of current account surplus, which means it will be a current account surplus for this quarter also. And as I spoke to economists, most of them are bringing down the current account deficit for the full year. Because the fourth quarter is a surplus, they were all working with 1 to 1.2% current account deficit as a percentage of GDP for this year. Now they're all bringing it down to maybe 0.7 thereabouts. But the negative is this fall in February imports. 16% fall in February imports. Does it mean that the economy is slowing? And the products that have slowed, petroleum products, iron and steel, transport equipment. I mean, you remember North American trucks to which Bharat Forge exports. These are the kinds of things that are showing a slowdown. So I would worry about this list. Many of them are, core Indian industry. Of course, gold and silver are a class apart, but the rest of them would give me a worry if you put it along with the fact that PMI is a 14-month low in February and auto sales, all entry-level cars and bikes did badly. I would worry whether fourth quarter is not going to be a gung-ho growth quarter.
We'll keep a track of this. Thank you very much, Lata. So maybe an indicator of the continued slowdown in the economy, the slowing of imports. So we'll take a quick commercial break here. A list of top stocks to watch with the research team coming up in just a bit from now.
Welcome back. So we've been telling you that Asian markets are a nice bright shade of green, and the implied open is telling us that we should, get a nice pop at the open. Whether it's a whole 150 points in the Nifty or not, we'll find out. But generally, the cues have been quite positive. So what about individual stocks? Well, our team is standing by with the CNBC-TV18 list of top stocks to watch. Good morning to all of you guys. So I'll start with you first. There's news coming in on Manappuram Finance. They're looking to raise some equity capital.
That's true. So first, before talking about the news, if you look at the stock performance, it's up 4% this month and up 11% 2025, and it's around 10% away from the record high. Now, what's the announcement? Manappuram Finance has today, early morning, has announced that its board will meet on March 20th to consider fundraising proposals via various options, including equity, debt, or via QIP or rights issue. Now, today, stock is in F&O band. In the last week of February, Manappuram Finance had clarified on the reports related to acquisition of stake by Bain Capital that might be valued at $1 billion. And what did company say? It says that it continues to evaluate various strategic and growth opportunities. So normally the news related to board considering fundraising is a normal news, but in this case, it's important because there have been several reports related to stake buy in Manappuram Finance over the last few months.
Take that point, Sudarshan. Thanks a lot for putting that into perspective. Remember, Nimesh had highlighted the possibility of this happening in his D Street chatter, and at the same time, the stock has gone into F&O ban as well, as Sudarshan pointed out. But the other one is IRCON. We've been talking about order wins for a lot of companies and them increasing as we move towards the end of the financial year, and IRCON is one in focus as well. Vamakshi joins in. Vamakshi.
Well, good morning, Mangalam. Yes, it's an order win for a JV of IRCON and BRC. Keep in mind that the JV has been awarded an EPC contract which was floated by the government of Meghalaya. The broad consideration for this project is worth 1,096 crores, out of which IRCON's share stands at 285 crores. So order win coming in their way bodes well for the company, going with the green for this counter.
All right. Well, let's talk about Star Cement now. Vinny is standing by to tell us why that should be in focus. Vinny, morning.
Hi, so we're keeping an eye out on Star Cement today. Mainly the company subsidiary has been declared as a preferred bidder for one of the sites, that is Boro Hundong limestone block that is in Assam. They've won this via the e-auction that was conducted by the government. Now, when you're looking at it, the estimated limestone resource for this is 146.75 million tons. Do not forget, in the recent past, the company has also been won a lot of mines. One was in Rajasthan, which you talk about in Q2 FY25 before, and in the recent times, we have Assam, where that one limestone block as well of, I beg your pardon, a mine which was of around 193 million tons as well. So a lot of mines that they've won in the recent times, expansion plans on that front, what they'll be working on, and that is why we're expecting a green coming in for Star Cement.
All right, so big limestone block in Assam, that's what they've got. Got it, Vinny, thank you very much. Let's move to the other big story. Bajaj Finserv, of course, is going to be in focus because it's finally happened. After 26 long years, Bajaj Finserv, along with the promoter entities, has decided to buy out its insurance JV partner, Allianz. Yash is here with a lot of the details. Big news coming in last evening, Yash.
Well, absolutely. And you spoke about 26 years. Those 26 years have had its ups and downs when it comes to, Allianz wanting to increase, not being able to increase its stake in both life and general insurance entity. But finally, the news is out. Bajaj Finserv and its promoter companies will be acquiring that entire 26% stake from Allianz in both general insurance as well as the life insurance entity. First big takeaway out of this particular transaction, as far as valuation is concerned, both sides, on the general insurance as well as life insurance side, the valuation is quite fair at which the transaction has happened. On the life insurance side, at about 1.84 times trailing, price to emerald value, and on the general insurance side, 4.9 times price to book value. So fair valuation as far as the transaction is concerned. Out of the 26% stake in both general and life insurance entity, Bajaj Holdings and Investments would be acquiring a major portion of that stake of about 19.95%. Bajaj Finserv, another listed entity, will acquire about 1% stake, and Jamnalal Sons will acquire about 5.04% stake in both life and general insurance entity. As far as the funds which would be used to acquire this 26% stake is concerned, for the life insurance entity, Bajaj Finserv and promoter companies will pay 10,400 crore, and Bajaj Finserv and promoter companies will pay about 13,780 crore for the general insurance stake.
Amidst all this, Bajaj Finserv, etc., will be in focus. The other stock which should be in focus is Jio Financial Services, because there were news reports that, because you read Allianz's statement as well. They're saying, well, we will use these proceeds
to reinvest in the market.
And they're very much committed to India. They will stay in India. And who knows, maybe, and there were reports suggesting that maybe, Jio could look at, because this transaction was long in the making. Now this has happened. Will they tie up with Jio? What would be the equity partnership? I mean, we'll have to wait and watch, but I think certainly the stock should be in focus.
Totally. The other thing is that while the stock of the last 1 month has been underperforming, just this month, in the month of March, it's up 6%. So some part of Street was sussing that. And the other part is also there could be passive flows coming in Jio Financial Services, because this is the next nifty entrant as well. So we'll keep an eye out on both Jio Financials as well as the stocks that Yash mentioned. But Aditya Birla Real Estate, that's another one which is in focus. Vinny joins in. Vinny, a project in Pune is what they've launched.
Absolutely, not only project, but this is the first one over there. So they're debuting, they're making a debut in the Pune market. Birla Estates debut coming in with Birla Punya is the project name. Revenue potential of around 2,700 crore rupees. The company has acquired around 16.5 acre land parcel as well just last year itself. So they have a lot of development and plans in the Pune region for itself. And now this is one of the first projects coming in the recent time. A lot of launches that have come in NCR region, Bangalore region as well. So they want to expand and grow their market as well across regions, and that is clearly seen in this strategy coming in. And an important project coming in, luxury project, luxury market, premium side, which has been doing well. So that is why we're expecting green on the screen for the company.
All right, well, more stocks with news flow. Vinny, thanks for that. Vamakshi is here with those. Vamakshi, morning.
Good morning, Prashant. First up is Suryoday Small Finance going with the green for this counter because the promoter and MD and CEO Bhaskar Babu Ramchandran has bought nearly 1.5 lakh equity shares from the open market. Post this transaction, the promoter holding now rises to 22.44%, while his own holding rises to 5.18%. Shilpa Medicare is the next one I'm watching out for, going with the green for this counter as well. It's because its arm Shilpa Biologicals has signed a binding term sheet with Switzerland-based Maptree Biologics. The scope of this includes co-development of an NBE, that is a new biological entity asset, which includes manufacturing as well as commercialization across geographies. This is a novel biological asset which will be used for immuno-oncological applications. Morpen has announced the launch of Empmapor, which is a treatment for type 2 diabetes. This comes at a fraction of the cost as compared to the drugs available in the market. So therefore, they plan to acquire a significant market share in the diabetes market in India. So going with the green for Morpen as well. Swiggy, on the other hand, Instamart has expanded its quick commerce to 100 cities across India, driven by the growing demand in Tier 2 as well as Tier 3 cities. So going with the green for this counter as well. And lastly, keep an eye out on NBCC. This counter is expected to open higher because they won an order worth almost 44 crores.
All right, Vamakshi, got it. Thank you very much. So plenty of stocks. Let's quickly recap the list. The ones that have positive news flow around them: Manappuram Finance, Aerocon International, Star Cement, Bajaj Finserv, Aditya Birla Real Estate, Suryoday Small Finance Bank, Shilpa Medicare, Morpen Lab, Swiggy and NBCC. And actually, there's no stock which has negative news flow around it this morning. So it's an all-green list. All right, that's stocks. What about commodities? We've got Manisha Gupta joining in with a quick roundup of the overnight action. Manisha, good morning.
Morning, Sylvie. Thank you for that. I'll start with the gold prices because we are holding above $3,000 an ounce on a sustainable basis now. So this is an all-time high that we are looking at in the Asian markets yet again. We are looking at weaker data from the U.S. markets, whether it was retail sales, consumer confidence, home building. All those numbers have come in weaker than the expectations. And then the OECD also says that the global growth that they're looking at for this year, they've revised it on the downside. That is what has led to safe haven buying come in for gold. But it is the other metals as well which seem to be doing quite well. Copper, for example, gained 1.5% overnight. Copper is an outperformance of a commodity within the metal space with 25% gains already in this year now. Aluminum is trading very close to its 9-month highs. We've seen tin prices trade at a 4-year highs. Nickel is trading at a 13-month highs. So everything that says metals, whether it's precious and base metals, seems to be doing quite well. What the street will watch out now is, of course, the U.S. Fed meeting, but you also have central bank meetings from Japan and UK this week as well. So continues to be a volatile happening week.
All right, Manisha, thank you very much for that. We take a break. We are back. We connect with Hemang Jani and we discuss what's happening with the individual names. We talk about the Bajaj story and many others as well. Stay tuned. Coming up.
Welcome back. You're watching us here on Bazaar Morning Call. In case you just tuned in, we're setting ourselves to a strong start. That's what the GIFT Nifty indicates on account of a good handover coming in from Wall Street and decent enough opening in Asia as well. 165 points after a decentish sort of gain yesterday as well. 111 points is what the Nifty put on in yesterday's trading session. Hemang Jani, market expert, now joins us. Hemang, good morning. You know, the big stock that we'll be tracking today would be Bajaj Finance. What do you make of the deal? 26% is what they've bought from Allianz, and Allianz says that they will reinvest this in the Indian markets itself. So in light of that, do you look at other stocks as well, potentially Jio Financial Services?
Good morning, Mangalam. Yes, I think this deal is very important and it's been a long pending deal, as you all know. I think key takeaways from our perspective is that compared to the consensus fair value of both general insurance and life insurance companies, the deal has been done at 19 and 14% discount. The general insurance is at 19% discount. The life insurance is at 14% discount. So I think in the negotiations, the Bajaj Group has been able to get a slightly, better edge or advantage, which is important. It will give them a bit of a control because of the stake that they have. So I do think that, Bajaj Holding, which is a holding company of the Bajaj Group and has a 36% stake in Bajaj Auto and 36% stake in Bajaj Finserv. If you consider the current market cap of Bajaj Holding and versus that when you value all these components, I do think that there is a case for some sort of unlocking of value when it comes to Bajaj Holding also. So that's my takeaway. And as far as alliances, entry into the market, yes, they could go solo, they could tie up with any of the incumbent players. It remains to be seen whether, what exactly decision they would take. But you might have some possibility of the deal being done with Jio also, and that would be a stock that we will be watching out for.
No, absolutely, and we'll see how that one goes as and when it happens. Just a quick word on IKS, which was the big casualty yesterday. Hemang, but good morning. That lock-in ended, stock ended about 12-13% lower. Any thoughts at all? Hemang, can you hear me?
Prashant, your voice...
IKS.
Yeah, I can hear you, but... IKS you're asking about, right?
Yes. I mean, IKS Health, the 3-month shareholder lock-in ended. And I think we got some calls as well. I think JP Morgan has got a call out. We'll have Hormus talk to us about that. But if you have coverage, if you've looked at the business's recent listing, any thoughts at all here?
So typically, Prashant, I think was because of the lock-in, getting over. Also, IPO flavor is pretty much not there, right? So I think that some of these companies where you have this issue, you might have to go through a bit of a pain point. But overall, when I look at that company, it looks quite decent. I think the space it's operating in, the latest quarterly numbers were also quite okay. It's not too negative on the stock only because of this reason.
All right, we take that point, Hemang. You know what we'll do is we'll ask you to stay, perhaps listen into this conversation, and we'll get your views on the gems and jewelry sector as well. Senco Gold, the first management on the show. The stock, remember, is down about 70% from the highs. And to discuss the business outlook, the impact of higher gold prices, what the company is doing in the lab-grown space as well, as they've been speaking about it too. Suvankar Sen, who's the MD and CEO at Senco Gold and Diamonds, joins in now. Suvankar, the last 2 quarters were rather weak when it came to margins. But more importantly, there wasn't any, supernormal growth that the street was anticipating as well. You grew pretty much at the same level as the leader. And the street has, perhaps given its verdict by the kind of decline that we've seen in the stock price from the highs as well. So the question, obviously, after this big drop, and you recently raised funds via QIP as well at 2x the price at which the stock is currently trading. What are your thoughts on growth? What are your thoughts on margin? And, the kind of wealth disruption that has happened from the peak. What are your, clarifications to shareholders, if any?
See, from the beginning, we've been saying that, every year we will be targeting 20 stores that we would open year after year. Be it this year, we've already opened 15 stores and about 45 stores are in the pipeline. In the coming year, we also have plans to open 20 odd stores. If we look at the growth rate, very surprisingly, we'll see that we've been growing top line at the rate of approximately 20%. So whatever we have been estimating and guiding, the markets and our investors, we have been achieving those numbers. It is true that in Q2 and Q3, the numbers have not been that good in terms of the bottom line, but that is mostly driven by the fact that the duty cut that has happened, in terms of the initiative of the government, which in itself was a very good thing, considering the fact that the international gold prices have moved up so high. So this 9% duty cut has been a great a relief for the consumers at large, and that has led to a lot of volume growth. Is just a one-time impact, and I think that once Q2 and Q3, where we have taken the loss that had to be taken, a one-time loss, and now as we move on to Q4, again things are back to normal. I think that the EBITDAs and the gross margins that we are expecting and what we have been guiding from before is going to go back to the same levels of close to 7% EBITDA and the gross margins back to its own level. So I think that yes, the markets and the investors have been a little jittery and uncertain with all the various things that is happening around the world, but fundamentally I do not see any change happening. Business continues to grow in a very sustainable level. The new initiatives and with what we see right now, that the international gold price has been all-time high. Even in India, the gold prices have been all-time high, has been playing in its own way. You see the consumers, the wedding season continues to remain in the month of June, and we are seeing a very solid demand from the wedding market. Yes, the normal consumers who would want to buy products worth 50,000-60,000 rupees, they are being a little confused whether to buy now or wait for the prices to correct. But another good thing that has happened is that, in Q1, Q2, Q3, the demand for diamond jewelry was a little on the lower side because people were seeing that the prices of gold were moving up. So diamond, lab grown, what will happen? But in Q4, we have seen that trend has changed. People have started buying diamond jewelry in 14 karat and 18 karat back as well, which will have a positive impact on the margin. So I think that in general, whatever the markets have been and the prices have come down, it is unfortunate that investors are getting a little panicky. But from my side, I can only assure that business continues to grow, and fundamentally, it's in a sustainable manner. We will continue to grow 20 stores, and we are expecting a top line growth of 20% this year and hope to continue this 20% growth year after year. So this is what I would like to say from my side.
We expect 20% top line growth. The street was perhaps pricing in a lot more, and that is the correction that has taken place. To your credit, you have been guiding for this 20-21% sort of growth every year. Margins an aberration itself. But 2 points that you said. One, that lower ticket gold items, say 40 to 50,000, people are on the tenter hooks out there because of rising gold prices. And second, diamond sales have come back as well. So to that extent, if you could give us a sense on, the kind of studded ratio that we can expect in the fourth quarter, the studded ratio target that you have for next year as well. And is there any problem when it comes to gold sales for this year, in the fourth quarter, because lower ticket items are being postponed or perhaps people are on the tenter hooks? And at the same time, silver sales as well, because we've looked at silver prices, they are up to about 1.1 lakh rupees per kilo. Have you seen an increase in silver, product sales as well? How does that do for your margins?
So if we look at the growth rate, silver, in spite of the increase in value in terms of volume and in terms of value, has grown at a much higher rate compared to gold and diamonds. Because I think silver is becoming one of the assets that consumers either for gifting or for lower ticket size investments or buying something for the home. I think silver has going to have a great future. With 100 rupees per gram kind of a price that we see and the potential of silver going up. So while silver is growing at about close to 18 to 20% in terms of volume as well as, a little more in value terms, we have seen that gold has grown to a marginal 1-2% volume growth, but value-wise it has grown like close to 20%. And diamond, which we have seen that in the first half of the year or even till Q3, the volume growth was negative. I think that trend is changing. Diamond volume growth is now becoming almost 1 to 2% and a value growth of 15%. Now here, there's something very interesting that is happening with diamond, is that with the bigger size diamond prices that have gone down a large extent, I think consumers have realized it. And we are also trying to educate the consumers that now with the Russian and the Ukraine war trying to, get solved, I think that gradually the diamond prices that had come down will start picking up, and it's a good time to buy your diamonds as well. And as far as lab-grown diamonds is concerned, yes, we've opened 4-5 stores. That itself is a separate segment where we are seeing that consumers are appreciating it. And it is not for your wedding that you will want to buy a lab-grown diamond. You would rather buy a natural diamond. But for your fashion, for your various other occasions in life, just to fulfill that aspiration of owning a big size diamond, lab-grown diamond is creating its own market, but it will take some time, maybe a year or two, to really start giving the return. So that is how we are looking at the scenario. And as far as small ticket size items are concerned, I think the shift from gold jewelry to diamond jewelry will be happening very drastically in the small size, because that is where the daily wear, everyday wear is coming in. So that's how one has to look at it and be prepared for the upcoming season. Akshaya Tritiya is in the end of April. So we are already in the middle of March. So full preparation for the upcoming season is also happening in place.
Not on time. Just a quick yes/no question on, will promoters buy? The stock is down 70% from the highs. You've increased your shareholding from 64% to 68%. Will promoters buy?
So just to give you an information that yesterday we have, as promoters, started buying. So we have bought yesterday, and hopefully we'll buy today, because though I don't want to kind of emotionally kind of appeal to anyone, but the fact is that we feel that the value is there. Business continues to remain strong.
How many shares? Sivankar, yesterday?
We've bought shares valued close to about 4 crores. So so that is what, and today we'll also buy some more. So that's how we would like to look at it.
All right. Well, I think thank you very much, Sivankar. Good to have you with us here. Appreciate it. Thank you for joining us. We'll take a quick commercial break here. Technical trades coming up on the other side. That's with Chandan Tapari and Mitesh Thakur coming up. Okay, welcome back. We've got Mitesh and Chandan with us to tell you what you should be doing, how should you be positioned as far as indices are concerned and stocks that one can look to trade. Gentlemen, good morning. Great to have both of you here. Chandan, let's start with you. Good morning. How things set up? What's the skew like? I mean, market generally has been sort of trading better and better, given everything which is happening around. And this has been true for the last 3-4 days now. Your sense, and what would you do?
Good morning, Prashant. Thanks for having me. So Nifty has been consolidating in a range, and the good part is that yesterday we opened on a negative note, and market made the open low formation and witnessed sustained buying interest for most part of the day. However, it failed to surpass 22,580, which has been working as a hurdle from last couple of days. But the good part is the base of the market is shifting higher. So I believe that with support of 22,330, index has potential to extend the recent recovery towards 22,800 to 23,000. So looking for a recovery in broader market and expecting some short covering trigger as well. Bank Nifty also witnessed higher highs, higher lows from last 3 trading session. And I believe some support-based buying could be there. If it manages to hold 58,000, then the recent recovery can take it towards 48,750 marks.
Okay, all right. Chandan got that. Mitesh, hi, morning. So what would your approach be? I mean, we finally managed to come to this level of 22,500. Where from here?
Good morning, Surbi. So, been indicating that the market is now doing a new range of 22,300 on the downside, about 22,600, 650 on the upside. And if you look at the data starting from 6th of March, we've had about 8 or 9 sessions, and on multiple occasions we've gone to 22,300 and bounced back from there, and we have similarly failed at higher levels. The good thing is that the indicators are rebounding from oversold levels, so eventually I think the immediate buyer should be on the upside, which means that we should retest 22,700, 750, 800 zones. And once we start clearing them, then I think, we have a much stronger chart to look at. But at least for the timing, I'll keep that as a target. So 22,600 being the first level, but I eventually expect 22,750, 800 to be tested in the next few days.
And what stocks are you backing today, Mitesh?
Morning, Mangalam. I have a buy on Cipla, and pharma as a sector is looking good on the short-term chart. So Cipla is a buy with a stop at 1478 for targets of 1525. PI Industries is a buy with a stop at 3320 for targets of 3480. From the banking pack, ICICI Bank was a call yesterday as well. Today I'll repeat it with a fresh stop loss and a fresh target. So buy here with a stop below 1259 for targets of 1295. And Adani Green is a buy as well. Keep a stop at 879. Look for targets of 935.
Thanks for that, Mitesh. Chandan, what about you? What would your trades be?
So my first trade will be buy on Indigo. We have positive view on the consumption theme, and Indigo is one of the strongest name in the entire market setup. Technically, it has given a breakout from its triangle formation on the weekly chart and has been making high tops, high bottom with hold of key moving averages. We have seen build-up of long positions and expecting better rollover activities as well. So recommending to buy with support of 4680, and Interglobal or Indigo can head towards 5,000 marks. Second trading idea that will be buy on Bajaj Finance. We have seen a positive price action, and it seems that now a positive pole and flag pattern is getting for a breakout. Major trend is positive, and small follow-up can lead for further 3 to 5% up move. Put writing started to witness, which is an early sign for the fresh breakout. So one can buy with support of 8,400 for an upside target towards 8,900. Last trading idea, that is buy on Muthoot Finance. Gold is glittering and shining, and I believe that selective gold finance companies can do well. So Muthoot Finance already seen the good run up in last few days, and positive momentum with trigger of the gold could take the counter to higher level. So one can buy with support of 20 to 40, and Muthoot Finance can head towards 2380 to 2400 zone.
All right, we take that point. Chandan, thank you so much for joining in with your picks as well. Take a short break, come back. We have the pre-opening, and also with us will be Pranav of Bernstein, who will discuss the key trends in the banking space.
Welcome back. You're with us on Open Exchange. We're live from the CNBC-TV18 Motilal Oswal studios, and it's 9, so the first of the rates will start trickling in. The anticipation is that we'll have a nice gap up, and the task for the bulls will be then to run with that gap up and not give it away. Right now, it's very euphoric, 500 points. Maybe not that good, but let's see. It should be an optimistic start for sure. Well, let's discuss a couple of stocks and some ideas. We've got Hemang Jani, of course, still with us. Hemang, on financials, what would your picks be? There's just too much going on. We were earlier discussing Jio Finance as well because of what's happened with Bajaj Finserv, right? Allianz will go their own independent way. They have said in writing in that statement last night that they're not giving up on the Indian market. What would you do with some of the other insurance stocks, looking at the action in this space?
I think financial Surabhi as a space has done well, and I do think that insurance, because market was awaiting some clarity on the GST part, and the regulatory changes have been there. The numbers have not been that great, so not too positive from a short-term perspective on the insurance place. But something like a Manappuram, I do think that if you have some fundraise and the fact that the stock has been trending well. Depending upon who comes into the company, what kind of fundraise is there, I do expect, re-rating over there, because the stock is quoting at 1.15 price to book, about 16% ROE. Also, banks, I think, relatively better placed. You're seeing some traction come through in ICICI Bank, Axis Bank. So I do think that those are the, companies where I would be more comfortable getting into.
Well, the rates right now on financials are really going through the roof. Clearly, this is extreme optimism that's playing up right now. On Bajaj Finserv, that stock in the pre-open is up 10%. But the other banks, HDFC, IndusInd, etc., they're all up, 4-5%. So let's see. Maybe we won't have this level of euphoria, but the indications have been fairly positive, at least at this point in time. Hemang, very quickly on the cement space, a lot of positive reports have started coming in, and both brokerage reports, also we know production numbers themselves. They've been improving over the last few months. Any picks here?
So large cap will go with Ultratech, and the mid cap we like JK Cement. I think compared to other guys, particularly southern based companies where you have some issues about that tax, I think JK Cement appears to be better placed.
Okay, by the way, on cement, I must also mention that Star Cement, which has won this big, giant limestone block in Assam, that's a stock which is in focus. It's up almost 6% right now in trade. That is Star Cement, and some other stocks in news that are doing really well. Suryodaya Small Finance Bank, promoters have bought shares from the market yesterday. The market likes that. So in the pre-open, that stock is also higher. Now we seem to have a more settled rate. It is very much in sync with the implied open. So almost 140 to 150 points gap up. That's what the pre-open Nifty is indicating. And this will take us right at the top of the recent trading range. Last 7-8 trading sessions, this is the top zone. Let's see if the index can break past that. Actually, since we're talking financials, let's quickly bring in Pranav Gundapalli as well. He tracks the banking space at Bernstein, and Bernstein has an outperform rating on IndusInd Bank, saying that asset quality is less of a concern right now, and perhaps cheap valuations could provide some upsides from here. They also like HDFC Bank, I believe. So, Pranav, let's ask you about the details. Since we started with IndusInd, I mean, that was the big event that happened last week, right? And it really shook up a fair amount of confidence with respect to the bank. This morning, we saw the Moody's release as well, where they haven't lowered the rating or the outlook on the bank, but there are certain, or there could be certain credit implications. Do you think the episode is over and done? And now, from sentiment perspective and stock price recovery perspective, we're on an upward path?
See, I think the stock is cheap. There's no big debate on that. But I think it's not fully done with the episode because there are a couple of risks that still linger around. I think the two of them would be, one is the stock pledge. I think a reasonably large part, almost 50% of the promoter holding is pledged. An adverse reaction could push the stock into a vicious cycle. So that's the biggest risk at this point, removed from the operating metrics of the bank, more to do with the promoter holding and the pledge. So that's the first risk. I think the second one is more around the high reliance on wholesale deposits. So that's always been a known issue for the bank. So in times like these, the risk of a huge outflow of deposits and its implication on growth and profitability, etc., again comes back. So that's the second risk that investors would want to wait and watch out for. We should get a good indication on how both of these factors are playing out in a few weeks' time when the bank reports its headline numbers for the quarter. So those would be the two big risks. In terms of asset quality, we think the bank is largely followed in line with the industry and with the industry trends suggesting that we are hitting the plateau, or at least are not seeing further worsening. I think that's becoming less of a concern at this point.
Pranav, but really just a terrible... who knew, right? I mean, I think we've spoken about IndusInd before this episode as well. The stock was at $1,100, and it looked attractive then. Of course, it's now even cheaper. But of course, cheapness in the eyes of the beholder. But this incident is just is crazy. Does it, so is it right to expect valuations to re-rate to a prior level, or you think there is a bit of a multiple derating here because of what has happened?
Right. See, I think this is the second episode of a big derating. I think first we had a big derating event happen around the ILFS period. And then you had a management change, and then there seemed to be some sort of stability, and now again you have this episode. So here we do think a key catalyst would be the appointment of a CEO with a 3-year tenure. I think a change of guard would provide some comfort against concerns of there being further issues with accounting or any of the other areas that they could crop up from. So I think beyond the stock pledge and deposit outflows I talked about, I think a key catalyst for the stock would be the appointment of a CEO, most likely an external CEO with a 3-year tenure. I think that would be critical. A continuation of this 1-year tenure story, or worst cases, RBI is forced to appoint a CEO of their choice. I think those would be negative events that create a further downside risk from here.
But this is only after this 1 year, fresh 1 year runs out, right? I mean, so it's some
could
time from
happen
now.
earlier as well. I guess that's the maximum tenure. I wouldn't be surprised if it happens a lot earlier than that.
You know, not exactly with regards to a specific company that's innocent, but this Bajaj deal which was announced yesterday, Bajaj and Allianz. Any thoughts at all on where this goes from here? I mean, it's a space in which a lot of banks are very active. Allianz is a big player, has been in India for a long time. They look for a partner. I mean, the name Jio Financial Services has been thrown into the mix over the last many weeks. What's your sense?
See, I think we are seeing a bit of a churn in those partnerships. I think with banks, many of the banks trying to create the entire set of financial offerings, which include the distribution of insurance, asset managers. And there are quite a few that lack that offering. So you will see some bit of a realignment of partners. So that's what is playing out. And this particular news was known to some extent, so not a complete surprise out of the blue. So it doesn't affect the larger banks. I think the mid-sized and smaller ones would be the ones where you will see some changes in these partnerships.
You know, there's an interesting analysis that you've done, a deep dive between HDFC Bank and ICICI Bank. The conclusion of that suggests that HDFC Bank is a better purchase right now than ICICI Bank. What I'm curious about is your thoughts on Kotak Mahindra Bank, because over the last 6 months, Kotak Mahindra Bank has actually gained about 8.5% as against ICICI and HDFC, which have been in that 1.5% sort of zone itself. So HDFC versus ICICI Bank, your preference is HDFC Bank. But among these three, what are your thoughts on Kotak?
Yeah, I think Kotak benefited from rally up from the lows it had dropped to following the RBI action, etc. So on a 6-month basis, yes, it does look to have outperformed. To us, I think the choice between the two or even the three boils down to the deposit growth that we see, especially the CASA deposits. For Kotak to see a big re-rating, we would expect to see a market improvement in their low-cost deposit accretion before we pick them over the larger banks. The smaller size is a help, but it doesn't really help unless you're seeing deposit growth which is faster or at least on par with HDFC and ICICI. Otherwise, given where the valuations are, not particularly cheap compared to an HDFC and ICICI. So it all boils down to the deposit growth. In fact, our discussion on HDFC with ICICI, ICICI was also largely based on the ability to grow their CASA franchise. That becomes the key reason to pick one versus the other.
Okay, all right. So deposit growth is where, the key factor really lies. Got it. Pranav, thank you very much. Great context and perspective as always. Thank you for joining us today. And I must say that financials is the hottest part of the market this morning. Look at the bank Nifty, it's up about 1%. But even non-banks, life insurance stocks are excited. SBI Life itself is the biggest winner on the Nifty right now. There's ICICI Bank, there's IndusInd Bank, Bajaj Finserv up about 1.5%, HDFC Bank and Shriram Finance. And perhaps why not, right? At the end of the day, it shows commitment. 24,000 crores is not a small sum of money, which, the Bajaj Group is willing to pump back into the business. Let's actually, since we're talking financials, talk about Manappuram Finance as well. We've got Sudarshan back to remind us about this equity fundraising that Manappuram is perhaps considering. Sudarshan.
So this gold loan financier is set to open with a gain of nearly 2% today, and it's on the back of announcement that company has made that its board is going to meet on March 20th to consider fundraising proposals, and that might be through equities or debt or rights issue or qualified institution placement. So there have been reports going on that Bain Capital might acquire majority stake in the company, and the deal might be valued at $1 billion. On February 24th, company had clarified on that report, saying that it keeps evaluating several proposals as it comes. Now, where does Manappuram Finance stand if you compare with peers? So, on the price to book value, Manappuram Finance current price to book value is 1.5x against 5-year average of 1.3. For Muthoot, price to book value is 3.3x versus 5-year average of 2.6. And for IIFL Finance, it's 1.1x versus 1.7x. As far as analyst recommendations are concerned, 41% of analysts covering Manappuram Finance have buy call, while 18% have sell call. For Muthoot Finance, 76% of total analysts have buy call, no analyst has a sell call. And for IIFL Finance, 60% of the analysts have a buy call and no one has a sell call. So on the valuation front, it's trading below Muthoot Finance but higher than IIFL Finance.
Right, Sudarshan, thanks a lot for that. So that's Manappuram Finance. The analyst calls the deal which is likely, and at the same time relative valuations. But I'm looking at a bunch of consumer stocks and all of them in focus on account of very interesting reasons. Pidilite is the one that I'm watching out for. Remember, prices with regards to raw materials have been largely maintained. The company is holding its analyst meet today. Remember, Bharat Puri's term, a glorious term if one may, ends on March 31st. Sudhanshu Vats will succeed Bharat Puri. So transition, management strategy, outlook on demand, raw material prices, and more importantly, their paint business foray is something that the street will keep an eye out on. Analysts may put pen to paper on Pidilite tomorrow, so we'll watch out for that one. Godrej Consumer was an outperformer yesterday. It's meeting a group of investors at the India Consumer Tour with CLSA today. And we also have a Goldman Sachs note saying that, the third quarter was an aberration in an otherwise strong volume growth trajectory for the company. In fact, they believe that this will be the fastest growth FMCG company in their coverage in FY26. They maintain their target price at 1370. Varun Beverages is the other one. Remember, start of March, as we move into summer, beverage stocks do well. And in that, Varun Beverages is one of them. They reported their annual report, or they released their annual report a couple of days ago, and we had a bunch of analysts, notes that came in as well. This morning, it's from DAM Capital, which says that they believe that the recent stock price correction offers an attractive entry point as against all the competition coming in from Campa, etc. They have a fair amount of capacity headroom, not just in India, but the Africa business for them ramping up as well. So a big cut from the highs we saw in Varun Beverages. This may well be stock to buy the dip on.
Right.
Up 20% in this month when the market's been correct. Varun Beverages.
Down 40% from
summer is coming,
well.
and you need the cooler stuff. We got market open 22,645, 22,650. So, the first things first. We've now once again for the second time we're back above the 20-day moving average. Yesterday there was a throwover, but then the market ended under the 20-day. But this morning, 22,600 plus. So that's a good start. The Nifty Bank is even better, 0.6% higher. It's private banks. It was yesterday as well. It was the private bank space which was buzzing. And I suspect that's again the case this morning, powering the gains as far as the Bank Nifty goes. The mid-cap index is up about 0.5%. And I think you've got the small-cap index, which will come up on your screen, which should also be higher. Lots of stocks at the bottom of the screen in terms of what's starting up. There's one lone name in the red in the Nifty 50. The heat map is coming into view. 49 up, 1 down. And as I've been saying, the market has been trading much better last few trading sessions. Looks like at the margin, don't want to jinx it, but maybe price-wise perhaps, hopefully a bottom is in. And of course, what it does from here is another question. What shape, form, how fast? We'll see, but 22,600 plus as far as the start goes. Let's get to stocks. Surabhi.
Well, it's pretty diverse today, and it's not just one sector or one set of stocks that's taking the market higher. Metals are definitely shining bright. Hindalco is the top gainer on the Nifty, 2% higher. Financials are very, very strong. Financials, banks and non-banks put together are the smartest trade this morning, you'd have to see. Bank Nifty is up almost 0.8%. ICICI Bank, Axis Bank, these are gainers above 1%. In the non-banks, we've got Shriram Finance. Let's also talk about, of course, the stock of the moment because of the news flow, which is Bajaj Finserv and Finance both. 0.5% up on these two for the timing. I just want to check what Jio Finance is doing. If there's any excitement around Jio, let's get that stock up on the screen as well. About 0.7% higher. That's Jio Finance. Beyond the financials, by the way, Shriram Finance as well, up about 1%. You'll hear from the company as we go along in the show. HDFC Bank is also contributing, and so is IndusInd Bank. So financials looking very good. But beyond financials, there's Reliance, there's L&T, So there are plenty of legs to this move that we are seeing this morning. The only actually slightly sobering spot is technology. Once again, big concerns around what's happening with the US. HCL Tech, TCS, Infosys, these are your stocks on the way down. But barring these 2-3 names, it's actually a very green-looking Nifty screen.
You know, Prashant said that from a price standpoint, we perhaps have made a bottom. And every time we do that, it's the mid and small caps which actually outperform, because the street then becomes a lot more risk-taking. And we have, exactly that playing out. 1,700 stocks in the green. Remember, we opened with 1,300 stocks in the green. So that ratio is firmly in favor of the gainers. And look at the bunch of stocks that are gaining today. We have Ircon. They, the joint venture won an order worth 1,100 crores, of which the company share is just 285 crores. Stocks up 7.5%, almost 8%. Not a very big order win, but an order win nevertheless, enough to take the stock higher by 8%. You have NBCC. Again, just a 45 crore order that the company has gotten, regular course of business, but that stock has been well bid as well, 2.5% higher. Manappuram, board meet on March to consider fundraising proposals. Is Bain coming in or not? That stock up around 1.5%. Senco, this morning we had the management join us, say that they bought shares worth 4 crores in the market yesterday, perhaps are likely to buy today as well. What has the street done? 5% upper circuit on that stock as well. The only one stock which is lower, notably with reason, is International Gemological Institute. Remember, seen a big cut from the highs itself, from the IPO highs, and now the stock down 5%. The anchor lock-in opens today, so maybe more supply coming in on that stock, likely to be underbid in today's trading session as well, so down about 5%. But by and large, the mid-cap screen looks like a very bright green.
Absolutely. 100 points on the Nifty is what we have. So holding above the 22,600 level. Just a few other names with very large volumes. Ircon, I think Mangala mentioned that, 7%. Varun Beverages is the number 2 biggest volume-led gainer. It's a 3% pop. MobiKwik sold off sharply yesterday. It's about 4.5% higher. Recent listing, Bluejet is up 3.5%. You got Triveni Turbine, which is up 3.5%. Motilal is up about 2.5%. Car Trade is up 2.6, 2.7. And I think PVR Inox is coming up with about a 3% again as well. 361, the wealth manager, 4% higher. PG Electroplast. Senco is now limit up. Senco is up 5%. Yeah. The manager was telling us
they're buying more shares apparently in the market today, they were saying.
Maybe we don't know who's buying that is, but stocks up. You got Sula. Sula has got a 7% gain. 265, completely bombed out name, but 7.5%, 8%. And there is NetWeb, which is up about 4% as well. It's a good looking screen. 1,850 stocks are higher, about 400 stocks are lower at this stage. Broader flavor and idea of what's happening out there in the market. Mihir Vora is with us in the studios now, Chief Investment Officer at Trust Mutual Fund. Mihir, good to have you with us here. Good morning.
Good morning. I hope so. I think so. We've had a lot of pain, and the small cap index, for example, was down by 25%, but before we realize it, it's almost up by 8 to 10% from the bottom. So Mark, stick to your convictions.
So where are those convictions now, Mihir? And has anything changed in this 5-month long sort of recession? Not recession, what am I saying? Correction. Imagine that. So in terms of your conviction, what has changed and what remains the same?
Sure. So just like to spend a minute on, what happened exactly. The point is that, right? So the government spending, especially the capital expenditure part, it was much sharper. The cut was much sharper than expected, which impacted stock
earnings.
Yeah. Earnings as well as top line. Even if government spending comes back to normal levels, you have almost a 20% YOY increase in capex in the June quarter.
The obvious question is that should you now look at aggressively buying or should you look at selectively buying? And if yes, for aggression, what sectors? If yes, for selection?
Financials should, lead the pack, so to say, especially in the large cap and the diversified indices. In the small cap and mid cap indices, the financials weightage is much lesser. But
You said that small cap index before you blink was up 8% from the lows as well.
Correct.
Did you benefit from any of those declines?
I mean, we don't take big cash calls, frankly. So we were,
Larger financials.
Yes.
That's one aspect. Coming back to and since you're saying that now, you explained the base factor, right? That government spends anyway will start looking better because of the base factor. That question, saying,
Correct.
will previous leaders continue in this phase, or will they kind of give way to someone new?
I think they will continue, because this story that we talk about is a multi-year story towards renewables. Renewables targets are being scaled up. So all those themes were multi-year themes to start with, and they will continue. And stock prices are down like 40 to 60%. Not lag that much, and actually maybe lead the pack a bit. Okay. So maybe the kind of multi-bagger returns that you saw between 22 to 24 in some of these segments,
Apex led, and now post the budget, people are talking about consumption. There is a recovery in rural consumption. There is expected recovery in urban consumption. Where do you stand in the consumer stock?
Continue to underperform. I mean, it may do better than what it itself used to do, but it's still a boring number.
Okay.
Because most of these categories are well penetrated institutional equity side. Most of the large cap FMCG stocks have less than 10% CAGR in turnover over the last 10 years. Then cyclicality, we are talking about, maybe single digit or low double digit kind of a growth number, which is not what we want in our portfolio.
It's not asking, would you want to name one or two, I mean, a few ideas in the small and mid cap space where price damage has been quite a bit. How are you thinking? I mean, what kind of framework are you building to when you look at names, businesses? Because just simply price damage cannot be it, right?
Absolutely.
So
there's two triggers. I mean, name is not possible, but we have always been saying that the domestic economy makes more sense to play than the global economy, and we have been mostly bullish on the domestic themes. Within the domestic themes, as I said, we were kind of underweight on the financials till now, more on the capex and physical asset creation side, so construction, railways, defense, those kind of themes, which we continue to be overweight on. And then specific stock picking in the healthcare segment. So within healthcare also we have generics, we have CDMO, we have the hospitals, and we also have the diagnostic plays. So across healthcare also we are overweight. So we are structurally overweight on industrials and the physical asset creation, including real estate. We are structurally positive on the healthcare segment typically. That's what we tend to do. But now incrementally, as I said, I would play more of the domestic financials.
You speak about real estate incrementally. We've seen an up move come by on Aditya Birla Real Estate. Remember, the company has launched a project, their first project in Pune, eponymously named Punya, Aditya Birla Punya, and they expect sales in that business to come to around 2,700 crore rupees. So AB Real Estate up 4%. The street takes note of that. On real estate specifically, where in the cycle do you think we are? Because at one point the prices were going extremely high. This is flat prices that we're talking about. Now, there are pockets of problems in the entry and mid space, whereas luxury continues to do okay-ish. Where do you think we are on the real estate space, and what sectors would you back? Would it be Bangalore, Hyderabad, Bombay or Delhi?
In real estate, I would not really play for price appreciation anymore in most of the market segments, because we have seen good price appreciation in the last 3 years in most of the segments. But volume growth, especially for the organized players, I don't see a problem. Because even now when quality builders are launching projects, they are getting lapped up. There might be a bit of a froth in the NCR market, especially the Gurgaon, where, things are a bit wonky. I don't know how much is, bookings and how much is genuine sales there. But in general, I think volume growth is something that we need to play for. And as you mentioned, the affordable housing still needs a bit more push, I guess. It's not the strongest segment. We still continue to be in the K-shape of the real estate space.
You mentioned financials, so I just want to come back to that. By the way, just let's pull up the stocks as well, Bajaj Finserv, and I think in finance, they have now turned slightly lower. That's the situation. Look at the other life insurance stocks as well. Pru, Lombard, there's some green over there. SBI Life also started out positive. Let's talk about the non-banks, because you're positive on overall financials and what makes sense to you over here. With insurance, the thing is that there are so many regulatory changes. Every quarter, something from IRDAI or something on taxation, which kind of, truncates the wider move. But we know there's commitment in this deal. I mean, this morning's deal tells us that there is serious money being put to work over here. What do you like in non-banks?
So in non-banks, we've recently, not recently, we've basically always been positive on the capital markets theme.
Okay.
Of course, that theme has taken a beating for lots of reasons. First of all, in some of the exchanges, etc., because of regulatory changes, volumes have come down and all that. So we have seen stock prices take a beating. But now they've, I think, formed a good base in any case. So structurally, in the capital markets theme, because we think the savings pool will continue to increase. So everything linked to the savings pool, which is wealth management, broking, asset management, and then of course you have more trading, etc., exchanges, etc., mutual fund distributors, for example, they'll continue to do well. They will continue to grow at a rate which is faster than the rest of the financials. So structurally, I think the capital market segment will grow even faster than the lenders.
And the vagaries of the market don't worry you, because typically the sentiment is that the stocks will fall every time the market falls.
They will be pro-cyclical.
Yeah.
They'll be high beta in the direction of the market. But point to point, if I were to take a 10-year view, I think they will
overall
outperform.
it will give you better returns. And what about lenders? You're saying some of these capital market plays will outperform, let's say, lenders
over the longer term, but they'll be high beta.
But in lenders, because it's not a paint everybody with one brush situation anymore.
Correct.
So what is governing your stock picking when it comes to banks?
Absolutely. So as I said, in the lenders, I'm bullish both on the NBFCs as well as the banks. NBFCs probably in the shorter term might benefit more by the rate cut cycle, because most of the NBFC lending is fixed rate, again, as compared to the banks, which is floating rate. So when rate cuts happen, the bank's asset book will get repriced faster downwards. The liability book will take a little while to, so they might not be able to improve their margins immediately. But NBFCs, because their borrowing costs can come down sharply immediately, they can improve their margins in the shorter term. And plus, the RBI had been really coming down heavily on the NBFCs last year, which they are now easing.
They have some reprieve over
So they have a
regulatory,
bit of a regulatory tailwind also.
What about hospitality? We've been speaking about, that being in a cyclical uptrend, also demand-supply dynamics favoring the industry, unorganized to organized, and all FMCG, yes, under-penetrated, but consumer discretionary doing a lot better, and hospitality is one of those spaces.
Absolutely. So, the K-shape continues in the economy, while rural is catching up. I think as far as growth rates are concerned, all the premium segments will continue to do well, whether it's hospitality or airlines or, hotels or even your high-end jewelry, for example, watches, high-end cars, SUVs versus cars. So that, I think, theme will continue.
Mir, pleasure having you with us here. Thank you very much for joining us.
Thanks for having me.
Appreciate your thoughts, as always. Now, let's focus on the big story from last evening, right? Which is, of course, the Bajaj Allianz separation in that sense after actually decades of working together. And my colleague Yash, of course, has been tracking this for the past many months now. This finally happened. And Yash is now picking up some more plans with regards to what Bajaj Finserv's what Bajaj Finserv wants to do with both the life insurance and the general insurance entity. Yash, good morning. Take it away.
Good morning, Prashant. So, of course, with this particular announcement of the transaction, one thing which is clear is that Bajaj Finserv and its promoter companies will have 100% ownership of Bajaj Allianz General Insurance as well as Bajaj Allianz Life Insurance. What that does is it gives them freedom in terms of what they want to do with that 100% ownership, a lot more flexibility. Now, a natural question was, of course, that after, a termination of this JV with Allianz, would Bajaj Finserv go out and look for another investor, a like-minded investor, to bring in capital as well as expertise in both the JVs? What we've been given to understand from our sources is that the intention is completely opposite of that. In fact, Bajaj Finserv does not want to get any new investor, strategic investor in the life as well as the general insurance JV. And the intention is to have it owned entirely by Bajaj Finserv and its promoter group companies, essentially Bajaj Group. But, over a period of 1 to 2 years, the intention is also to unlock some value out of these two entities. And the way to do it, as per the company's consideration, would be to look at a public listing of both life and general insurance entities. But at the same time, there are a lot of moving parts in terms of regulations at this point of time. So any potential listing, as I've been given to understand, would only be a FY27 event. The valuations we have, Bajaj Allianz General Insurance, the deal values the company at over 53,000 crore rupees, the life insurance entity at over 40,000 crore rupees. So combined valuation at this point of nearly about 1 lakh crore rupees.
All right, take that point. Yes, thank you for bringing us up to speed with all the developments out there. We will, keep an eye out on Bajaj Fin and Bajaj Finserv. But the stock on our radar, the sector on our, radar right now is the paint space. Brent crude prices are contained around that $71 per barrel. Will this impact margins of paint companies? How's demand holding up ahead of, any sort of up move that we'll see in terms of urban demand as well? Abhijit Roy, who's the Managing Director and CEO at Berger Paints, joins us now. Abhijit, the paint space always buzzing, right? Right now, it's raw material prices which are contained. That should bode well for your margins. But in light of competition, are you passing all of that value to consumers and perhaps, keeping your market share intact as well? The question, so many moving parts, right? How has demand been in the fourth quarter so far? What are your expectations in terms of volume growth, volume value equation and margins?
So, good morning, Mangalam. And yes, there's been some improvement, as expected. We had indicated that quarter 3 was better than quarter 2 and quarter 4 is likely to be slightly better than quarter 3. So that trend continues, and we expect that the volume growth will be in high single digit and value growth will be in mid single digit. The gap which was there earlier was almost 6%. That gap will get narrowed to about 3% from the volume and the value. So that is how it looks like in quarter 4. Demand is not, very strong, but it has picked up definitely from what it was in quarter 3. So there will be a marginal improvement, therefore, in the value growth. As far as profit margins are concerned, we haven't passed on anything because these profit that you are seeing, in terms of the raw material prices going down because of the oil prices going down, that takes time to filter down, because immediately it doesn't happen. Some of the raw materials do get impacted immediately, but most of it takes its time. So as of now, there's been no passing down the profit margin. So it will possibly be retained a little bit, whatever comes this quarter.
So what would your EBITDA margins in the fourth quarter be?
Slightly better than what it was there in terms of quarter 3.
Okay, 15.9% is what you did in quarter 3. I just wanted to get a sense of how much better they would be in the fourth quarter and if you are releasing any targets for FY26 on volume and profitability front.
So it should be better, second half specifically in financial year 26 should, be better than what it has been this year. This is the expectation. In general, we expect the consumer demand will pick up next year. As you know, all the FMCG companies, including, paint category, has been impacted by a little bit, headwind in terms of demand scenario. Government has taken some action. We need to see, from April onwards, whether the demand really does pick up and to what extent it picks up.
What about competition? There is a lot happening. We've been speaking about Birla Opus. They did their first festive season. Relatively resilient on the east side is you because they didn't have as much presence. But now they are planning to, open their plant in the eastern part of the country as well. Chances are that there could be further intensified competition in areas that you operate in. What are your thoughts on that? And what are your feelers from the ground on their product quality, on their distribution strength, and what they've done so far in the festive season?
So they are, I would say a player who's serious, in the paint industry, and therefore, there's no doubt that they have some presence built up now. As far as the East is concerned, they are already there across locations. I don't think factory coming in is going to add significantly to whatever they are doing today. Largely because, the paints are coming from different locations, north, south, east, west. If you look at even the leader, which is Asian Paints, they don't have a factory in the east, but they are, quite strong as far as the eastern market is concerned. So it doesn't matter actually, whether you open the factory immediately or, we have in fact 2 factories, but that doesn't make us, the clear leader here or something like that. So we are strong, definitely. And, we are there in this place, for a long time. We have our own strengths in terms of brand equity, in terms of distribution network, in terms of our relationship with painters, applicators, builders, architects. So that will hold true. I don't see that changing, in any significant way just because the factory is going to be built. As far as Birla's performance is concerned, they have been saying that, they have large network now on the ground, which we are tracking, and we see that, network expansion has happened. As of now, YTD basis, they have about 3.5 to 3.8% market share, which is likely to, if you look at the monthly run rate, maybe it is about 5 to 6%, in terms of market share. So that is how it is placed. Some of it has come from the organized, some of it from the unorganized. As far as we are concerned, even though there has been two headwinds this year, 5% in terms of price drop, which we had to face this, plus, the competition from the new entrant. In spite of that, we are still growing, so next year when, the 5% goes away, and the competition intensity will remain, but possibly, it will be muted than what it has been this year. So we expect that the growth rate for us will continue.
Mr. Roy, hi, sir. Great to have you on the show this morning. Just two quick questions from my side. One, given this prolonged period of, of pain and pressure, slower volumes, just curious, what sort of capacity utilization levels would your plants be operating at right now?
65 to 70%, this is where we are operating.
Okay, got that. Now, in that context, obviously there's just so much happening in the sector, right? We discussed Birla's. You in the past have told us that if it's the right price, if it's the right strategic fit, then you'd also consider Axo's India assets. Where is that? I mean, they've started that formal process, but have you entered into any discussions?
No, we haven't. So we found the valuation to be on the higher side, so we dropped out, of the race, at the stage, when they wanted more serious discussions, so as of now, we are out, but in case there is an opportunity which opens up later, we may again look at it seriously.
You found the valuations high, at least in the first round, so you're not interested.
That's right.
Just one question. Morning, Sir Prashant here. Oil prices have come off very sharply. And I think 40-50% of your raw material cost comes from crude oil derivatives. Could you give us a sense of how this is likely to, if prices stay here and maybe even head lower, as is widely expected, will that provide a margin fillip to you? Give us, if you can provide us with some numbers here going forward.
Prashant, it depends. It's not that high, in terms of the oil impact, because direct oil impact is in the solvents. And then on the monomers, these are the two products where oil impacts, the prices. And, there are other factors like, the demand supply situation, how much of supply is there in the market. So a lot of other factors come into play. It does impact, some softening will happen, but it doesn't get passed on immediately to our raw materials and then on to finished goods, because we have inventory, which takes time, therefore, to liquidate. So if it comes, it will come more towards the first quarter, unless the prices again start rising, because these things are very unstable. You never know. Now it has decreased. 2 months back, it was increasing.
Abhijit, Mr. Roy, while we speak about margins in your business as well, while we speak to you, we also speak through you for the industry. There are murmurs of a lot happening at the leader itself, because the leader has lost some market share. You have a significant competitor. All of that, you've been gaining market share. Is there anything that we can hear from Asian Paints? Is there any market chatter that you have picked up?
No, I can't comment on what they are doing. I would like to focus on my team and our company. So we are relatively very stable. We have a good stable team here. We continue to therefore, perform in the market, continue to grow. So that's all that I can say. I don't think I am in a position to comment on competitors like that.
All right, take that point. Thank you so much, Abhijit. Always a pleasure speaking with you. Wish you good luck for the fourth quarter and the quarters coming ahead as well. Take a short break, come back. On the other side, we have the management of Shriram Finance joining in, as the company has raised over 300 million from development financial institutions.
Welcome back. Just a quick check on the market before we carry on with more corporate conversations. Market's holding actually quite nice and steady, 160 points up. So that opening gap has not been sold into. In fact, we are trending at the highest point of the morning so far. So it's looking really good. Financials are leading and the mid-cap index is also doing very, very well. It's a solid Tuesday morning of trade. Well, speaking of financials, let's put the spotlight on Shriram Finance. There were some fresh developments at the company, which they shared yesterday. The company has raised over $306 million from development financial institutions. To talk about this and, of course, to discuss the overall business environment, we have Mr. Umesh Revankar, Executive Vice Chairman at Shriram Finance, joining in. Mr. Revankar, always a pleasure having you on the show. Thank you so much for joining in. So I was going through your press release that came in yesterday. This is an external commercial borrowing, and you've got a lot of marquee institutions who've chosen to participate. So congratulations on that. But what does this do to your overall borrowing cost? Just give us a whole mix. How much is local borrowing? How much is overseas? And at what rates did you pick up this financing? What does it mean for overall cost of finance?
Yeah. See, basically what happens is overall, if you look at my total liability side, 24% is the deposits. We are deposit taking NBFC, and the bank term loans are around 20%. Then we have a securitization done by a bank on the priority sale. That's around 18%. The external commercial borrowing, ECB loans and bond put together, it's around 18%. So overall, we would like to keep around 20% each. Around 20% is the capital market from the capital market entities. So we would like to have 5 large sources with around 20% each. That is the strategy we have. External commercial borrowing, especially if it is a loan, normally comes at better rate because development institutes, when they participate for a social loan, we are able to get a better rate. So landed cost will be less than 9%, around 8.5 to 8.6, I can say, with all hedging cost added. So we hedge all international borrowing in the bond market or even the whatever we raise in dollars.
So you're saying that the total cost of this new loan that you've raised is 8.5 to 8.6, including hedging. Now, we're anyway in an environment which has become a little more easier for NBFCs, right? The risk weights that were hiked, they've been rolled back. The RBI has been pumping in a huge amount of liquidity in the system as well. So overall, in the last 2-3 weeks, what's the easing in liquidity conditions? And give us some sense of also what that means for your margins as you look at Q4 and then Q1.
See, Q on Q, if I look at for incremental borrowing, then 10 basis point, there is improvement, that is lesser. So to that extent, yes, we have the margins a little expanded, but I cannot say that it will translate into total what I call margin improvement. We need to wait till the quarter end for getting the numbers, because typically in the month of March, we also do large new vehicles, and new vehicle lending will be at little lower rate. So it may not have a big impact on net interest margin, but yes, it will be positive, definitely, better than the previous quarter. But going forward, I feel the liquidity situation being good, and as you rightly put it, the risk weight, there has been changed by the regulator, and the banks would be passing on some benefit to us. Immediately, you don't see that in this quarter. But going forward for next couple of quarters, I see bank translating that into a lower cost for us. That will help industry as a whole.
So just reiterating, you're saying you've seen 10 basis points improvement quarter on quarter in your cost of borrowings, and NIMs overall Q4, I mean, you see a favorable move. Just a last question, sir, on growth itself. Just tell us in terms of AUM growth. And the reason I ask you this is that there's a debate going on in auto financing. I mean, there are some analysts that are saying that the reason why two-wheeler sales are falling is that financing has become a constraint. But large OEM makers like Bajaj Auto say that's not really a concern. You tell us, you're in the lending business. Is there any constraint to financing of CVs at the lower end? CVs, used PVs, two-wheelers, etc.
No, two-wheeler especially, third quarter is always a large and fourth quarter will be lesser than the third quarter. That's every year because third quarter being the festive period.
Right.
So you can't compare between the third quarter and the fourth quarter. But we have not seen, compare year on year, we have not really seen any negative growth. It is a little flat. It has not grown big, yes. Because there were some geographies where
Mr. Revankar, point taken. Thank you very much for joining us. Good to have you with us here. Yashish Dahiya is now joining us. He's our next guest, Chairman and Group CEO at PB Fintech. Mr. Dahiya, good to have you with us here. Good morning. We spoke early February extensively about your plans for the healthcare foray, and that foray is taking shape. You're investing almost 600-700 crores in the business. Let's start with that. Tell us a few things. When will this venture be rolled out? You're setting up some hospitals, subscription-based. And will there be further investment? You've said you'll bring in outside investors as well. Will you be putting in more money? When is that going to happen? And then tell us, there have been some concern in the market that, the focus here is not profitability. At least that's the view of some analysts that I've spoken to. If you can clarify on that as well. Go on, sir.
Sure. So, sorry about that. Essentially, what's happening is we have about 4 crore people in India who buy health insurance. And what we are creating is a facility for the health insurance industry, which includes everybody who has a health insurance to have essentially their own family doctor who advises them on what's the course of action they need to take. This person is not incentivized by how much they get treated or by what operations they have. This person does not make a referral fee. And what that implies is that this person can be fairly unbiased and be like a friend to the consumer and thus advise the consumer on whether they need to go to a hospital and which kind of hospital is right for them. At the next level, there is a network, which is a narrow network compared to the wide network that exists today. The wide network is about 14,000 hospitals in the country. You may select a small percentage of them, whatever the number be, 200, 400, 500 hospitals. And these are the hospitals where these consumers can go. And as long as they go there, their experience on the claim side is made very smooth. That is the whole approach. Now, out of this network, in one particular city, we would own that network. And the reason for doing that is principally to make sure that the experience from a technology perspective, from a consumer service perspective, is built to a different level, which we envisage can be a game changer for the consumers in terms of their experience. And then perhaps once that is proven, to roll that out across the network per se. Now, when you talk about PB Health, it is there is an investment going in of about 2,000 to 2,500 crores from various investors. Many of them are pure financial investors, and they have no reason to invest except for the financial return they expect to make out of that. I don't think it is for everybody and anybody, for the entire market to agree on what is the return they expect from that. They believe there is a return, that's why they are investing. A bit like when InfoEdge invested in Policy Bazaar way back in 2008. Many people believed it was not a great financial investment. They have made about 100x return.
Yeah.
So I would say let them who are putting their money be the best judge of whether putting their money is worth it or not.
No.
Yes, you are absolutely right. From a PB Fintech perspective, it is not just a financial investment. From a PB Fintech perspective, the fact that the health insurance customers get a better experience helps the industry do better and helps PB Fintech, which is a large, player in the health insurance industry, do better. And so clearly we have a bias, strategic reason to do this beyond the financial investment. But that does not mean that is the case for everybody. A lot of the investors coming in are pure financial.
No, I completely agree. But the only thing is that PB Fintech will have about 34% stake, right, in this entity.
Yes.
So you are kind of the prime driver. So
by the time I think by the time round 1A and 1B are over, because it's done in 1A and 1B, I think PB Fintech would be down to about 25-26%. And from a strategic perspective, because I know who the other investors are, I do not believe PB Fintech is the long-term strategic driver of this project. It is at best an incubator and a catalyst. It is not the long-term owner of this project, and nor is it the long-term driver of this project. At least two of the investors coming along are much more in that category than PB Fintech.
Can you tell us who are the other investors?
I have confidentiality. Like in any agreement, you cannot disclose people till the deal is done. And that is a pretty obvious thing. I don't know why people want to know that before the deal is completed. And the deal cannot...
So you're saying after the second round of fundraising, your PB Fintech stake will...
It is after the first round is complete, which is 90 days after the shareholder agreement is signed.
Right.
PB Fintech would be about 25%.
Okay, so PB Fintech stake will be down to 25%. That's an important point. You're saying for PB Fintech, it is not purely a financial investment, but one should not assume that, I mean, there are outside investors who want to return on their investment. So
I would hope so, unless they don't like their money.
But, and you're saying, the only problem is that you right now also said that for PB Fintech, it is not. So 25% is also a significant stake, and you are the man driving things, right? I mean, people are betting on you, Yashish. So when you say that financial return is not the sole driver, the sole motivation for this, hence that question. That is the only thing.
Let me explain. Financial return is not the sole driver for Policy Bazaar either. The primary objective of Policy Bazaar is to grow insurance penetration in India, specifically in health insurance and term insurance. And that's why it takes us 14 years to have broken even. And yes, we will make profits as well, like we are doing right now. But that is not the primary objective of our business. The primary objective is the purpose with which it is set up.
Absolutely.
For PB Health, the primary objective is giving the customer a great experience, making the insurance smoother. The primary objective is not to just make a profit.
Sure.
For any mission-driven business, your primary objective is not always to drive short-term profits.
No, absolutely. That's a very sort of noble, way of looking at it. But just to get back to some specifics,
I can't see another way to look at it.
No, the thing is that there are also shareholders, there are public shareholders, so we have to ask you the profit questions as well. I mean, that's the compulsion from our side. So just to go back,
the public shareholders have got enough information to make a decision, which they have to make over the next 25 odd days on whether this is a good project for them or not.
Absolutely. So Yashish, just
to do it, and I don't think the profitability of this particular venture should be the primary decision maker for them on whether they need to invest or not invest.
That's an important point, and thank you for being candid enough to say that for shareholders, they need to think beyond profits as being the primary motive when they're coming to that decision. But just let me get to the specifics. What you're saying is that over the next 90 days, by the time the first round is over, PB Fintech's stake in this entity, PB Health, will come down to 25-26%. That's point number one. Since and for how long do you foresee PB Fintech holding at least this 25%? I heard you. You said over the long term, PB Fintech will not be the owner and driver. So for the foreseeable future, 2-3 years, do you expect PB Fintech, the listed entity, to continue holding at least 25%?
I don't know. PB Fintech, as of now, I don't envisage PB Fintech investing anything further. Now, what that means is, if 1 year down the line we raise more capital, PB Fintech is not participating, so of course it will get diluted. How much we will raise, I don't plan things to that level of detail right now.
Okay, sure.
Right? We are raising enough capital for the first 3 years. But that does not mean we will not raise more capital.
Okay. Okay, fair enough. So there could be further dilution, but you don't know how much and when at this point.
Yeah, at this point, I do not envisage PB Fintech ever having to invest again. Now, that is not a commitment that we will never invest. But what it means is I don't actually envisage it. I don't see it.
You don't see that need. You don't see that need at this point. Now, I must ask you the question of some basic assumptions, because like I said, that, as of now, there are public shareholders and they will have to decide whether to sort of participate in this or not. For their sake, just some estimates, because you would have done some basic homework. This kind of an investment, I mean, what is the kind of IRR, ROI, what is the kind of profitability margins? I'm sure you and the teams have done some basic math around this. If you could,
I think there is a 50% chance the project will fail. There's a 50% chance it might succeed. If it succeeds, it'll be very big. In a way, when we started Policy Bazaar, how much projection did you want me to make in 2008?
Right.
I, of course, have a projection. And I have shared that with our board. And we have shared some of the things with our own shareholders in terms of why we are doing this project.
Right.
We have also shared it with the other financial investors. And I don't think, for a private company out there, we are going to put, our projections every year out there. We don't even put projections for Policy Bazaar or PB Fintech. You do appreciate, right? I don't even disclose what our profits next year are going to be for PB Fintech.
No, we understand that, but past has it, and you said that shareholders have enough public information to make a call on what they want to do with their investments in PB Fintech.
Yes, and I'm clearly saying there's a 50% chance the project will fail.
Right. We take that point. And, apart from just this foray, there have been concerns around growth for your own core business as well, as there have been for Paisa Bazaar too. Though there have been, yes, please go ahead.
Your fear on the core business. In the year of the IPO, we did about 5,000 crores of premium. Right? This year, the core business alone, outside of POSP. So we are doing 23,000 crores. Let's say 5,000 crores is POSP. That's 18,000 crores. How much growth do you want? Is 5,000 to 18,000 not enough growth? In 3 years.
We get that, but it has to be relative to the industry as well, right? The street is betting on you growing.
Industry, my friend.
1.8 to 2 times industry is what the street is penciling in.
Yeah, I think it's about 3-4 times the industry. If you really do that math. From 5,000.
And you believe that you will continue to grow at 1.8 to 2 times?
What is that?
No, you believe that you will continue to grow at 1.8 to 2 times industry?
I don't think we give projections in that manner. I hope that we do grow faster than the industry. But all I'm saying is in the last 3 years, we have grown at about 3 to 4 times the industry.
Okay, and what about the disbursement growth in Paisa Bazaar?
Over the last 3 years, that is also the case. However, of course, during last year, there was a credit squeeze. So the disbursal would have gone down. That is obvious.
Have you seen signs of improvement, and do you expect them to improve?
Month on month, we are seeing signs of improvement now. I think if you were to think about it, maybe November was the lowest month. And since then, month on month, we are seeing signs of improvement. But I don't think anybody was, on the unsecured business side, able to display, significant growth as a market till November. But yes, now we are seeing signs of easing and signs of growth. Plus, the secured business has grown very well.
Yashish, by the way, I must say, Prashanthi, I love it. 50% chance success or 50% chance of failure. But, I think only you can say it and get away with it. You build the business,
there's nothing to get away with it, my friend.
No. I mean it as a compliment. I don't mean it in the sense that, I started by saying investors are betting on you because you built that business. And you said, and towards the tail end, you said if it succeeds, it'll be very big. So I think point taken. Just a quick thing, Yashish. When is this
what we are attempting to do is a very big change in the market.
Correct. Absolutely.
What we are attempting to do today, when you go to a hospital, a person at the back of the mind thinks, why is this operation happening? Is it because the doctor or the hospital is making money from this?
Yeah.
Right? Yeah. And it's a very big, serious problem.
Yeah.
So there are reports out there of various sorts, right? But let's not go by that. We're trying to solve that fundamental problem. Without that, how will the middle class have health insurance? How will it work?
Okay.
Just to complete that loop on the healthcare business itself, we take your candor that 50% chance of it failing, etc. What I just want to understand is your rationale of currently valuing it at close to around 2,100 crore? What
No,
went
we are valuing
into
it at
that?
zero, my
Yes.
friend. Again, you are getting it wrong.
No, the amount that you've put in versus the stake that you've got.
Please
Yes,
hear me out.
okay.
Please hear me out. There is cash coming in of 2,500 crores odd. The valuation is 2,500 crores after the cash comes in. There is something called pre-money and post-money value, very important for your, readers, because all of them are not financially very savvy. The pre-money valuation is zero, absolute zero.
No,
Okay,
no,
there is no premium. Everybody is coming in at cash. 2,500 crores of cash is coming in. I'm saying
yes. Post money is
value
absolutely.
Post the investment is 2,500 crores. So if I
Absolutely.
put
Point taken.
500 crores, I have 20%.
I
It is as
know.
simple as that.
No, so which is what we wanted to understand. What was your rationale for giving 20% for that 500 crores as against 100% or 80% for that 500 crores or as against say 10% for that 500 crores?
Everybody is coming in like an equal partner, putting in their money to buy the share.
And
the company is being set up from scratch. There is no value attributed
Absolutely.
to the concept or to any other thing out there, right?
Yes.
So it is
Yashish,
really
before...
unlike a typical
Okay.
thing, and I want to be very
Absolutely.
clear about it. The company is valued at the cash balance, nothing
Correct.
else.
Correct. Now, before we run out of time, because I want to ask a couple of other questions as well. So our colleague Yash did a story recently, very important story, on the regulatory front for your main bread and butter business, saying that the regulator, IRDAI, is not happy with general insurance companies, general and health, on how they have managed the EOM, expenses of management. Within that, what they're saying is, well, commissions actually have been very high. And, the regulator has communicated that unless this is brought down, there could be a cap on commissions. I'm sure you've seen the story. It was put out recently. I just wanted your thoughts, Yashish. How do you think about this? And how, if there were to be a cap on commissions, how will this affect your business? Because that is bread and butter. Go on.
See, our take rate is about 16%. That's the total revenue we make divided by our premium. Okay. The expense of management is at 30% in general insurance and 35% in health insurance. Besides that, this is a very large topic. It is more for the regulator to decide than for me to comment on. The regulator is the principal of this school. You are asking the prefect or the student to comment on the principal.
No, but will your business be
unfair?
The
regulator in their wisdom will decide what is right.
Yeah.
All I'm clarifying is we are at 16% and the expense of management limit is at 35%.
No, the problem, the point is the regulator is saying EOM is OPEX plus commissions. They're saying you've cut OPEX but not commissions. The way you manage that EOM number is by doing this. But commissions are high. Commissions have been climbing. So bring that lower. And hence the question, Yashish.
Yeah, so I think it's for the regulator. I don't really have a view on this, my friend. It is more for the regulator to decide. It's a bigger question than, I can answer.
Okay, Yashish, so to circle back to where we started, and since we've spent so much time, trying to make sense of PB Fintech's interest in PB Health, just leave us with some timelines now. The cash has been coming in, you're getting in the investors. When does the business come off the ground? And just remind our viewers once again, while you're talking about experience.
I just wanted to clarify, the cash has not come in yet. The cash will come in over the next
commitments are in.
Days.
Yes, the commitments are in. So therefore, what are the timelines? No, absolutely.
I wanted to explain. The money will come in by July end.
By July end, the money comes in. And then what are the timelines to get this network up and running, the better experience you're speaking of?
We should have an operation ready, some sort of an operation ready by about December, which is about 5 months after the cash comes in.
And by when do you decide that on which part of the 50% are you? 50% success rate, 50% failure rate? Is there any timeline?
I think we will know in about 4 years' time.
All right, 4 years' time. Okay.
All right. Well, Yashish, but we look forward to many conversations over the next 4 years, and it's always interesting speaking to you. We wish you all the best of luck as you build out that business, and I'm sure it'll be a success. It's not 50-50 with you at the helm. Thank you very much for joining us, and look forward to our next one. All right, that's Yashish with his perspective on the business, the underlying business, of course, the healthcare foray as well. We'll take a quick commercial break here. Manisha will be focusing on the commodity space. Stay tuned, coming up.
All right, welcome back. Well, the equity market's been holding up quite nice and steady. Let's figure out what's happening in commodities. We have Manisha with the latest. Manisha, so what's the headline there today?
Well, I want to look at metals really, Surbi. On top of my list clearly is gold, because the kind of run-up that we've seen into this one has been unstoppable. Last year was 28% of gains, and this year we're already up by 15%. We are trading above $3,000 an ounce, and last time I saw was $3,012, and we still are running on the higher side. The latest trigger really came in from the weak US data. Every number that's come in the last 24 hours, whether it has been about retail sales, new home builders, New York manufacturing contract, all of that came in on the weaker side. That has been supportive. And the inflation numbers were higher. Remember, the US Fed meeting starts today for 2 days. And ahead of that, we are looking at buying coming into this space. OECD report that came in yesterday also has cut the global growth forecast. That's supporting the markets there. And then US also has launched some airstrikes on Houthi men at rebels in Yemen. That has been yet another the geopolitical tensions that seem to be supporting the prices as well. That's about gold. Silver has been trading on the higher side as well. And when you look at within the industrial metals, copper is your space to be, because we've seen prices gain 1.5% overnight. Copper prices are up 25% in this year already right now. If you look at the US copper prices, they are much higher and are trading at a 10-month highs with a premium of almost $40 to $60 a ton. And when you look at the LME copper prices, they are trading at a 9-month highs as well. Aluminum is yet another metal which has continued to do quite well for itself. We've seen prices trade at around 9-month highs. 5.5% up in this year until now. There is low supplies coming in from major producers. And for aluminum, it also is about Chinese markets, where you are looking at exports muted, especially after those tax rebates were ended. Now, talk about the US markets, and with 25% import tariff imposed, you're looking at US aluminum trading at a premium of $990 a ton right now, with 60% of a jump up in premium from the start of this year. The other metal on my screen also is zinc and nickel, where we are looking at multi-year highs onto those one as well. And major support coming in from the US dollar index, which is trading at a 5-month lows. There also are more expectations of stimulus coming in from China. And then we already have seen China come out with a plan on Sunday. The clarity of that is awaited. And then finally, it is going to be about the central bank meetings. You have the US Fed happening today and tomorrow. It's also Bank of Japan and Bank of England, all of them meeting in this week. So any statements, any changes from there also will impact the markets.
Okay, all right. Thank you very much, Manisha, for that. With that, we have to quickly slip into a break. On the other side, our special segment, It's the Economy. Lata today will be in conversation with Niranjan Hiranandani of Hiranandani Group and Gulam Zia of Knight Frank India to discuss whether the stock market downfall has led to any sort of a slowdown in real estate sales.